What's up, investors, and welcome back to the Investors Club. On this channel, we focus on personal finance and growing passive income through dividend growth investing. So if any of that piques your interest, go ahead and hit the like and subscribe. Okay, guys, so you might notice that my portfolio is at $13,960, and no, it did not jump up today that much. I added $750 because today I'm going to show you 3 stocks that I'm going to buy, and I'm going to buy them on screen for you to see. Now, forewarning, this is not financial advice. I'm not telling you guys to go out and buy these stocks. I'm just showing you 3 stocks that I recommend buying. But I'm not saying to go buy them. I'm just showing you why I enjoy them. So let's take a look at them. The first one I want to look at is Store Capital. Now, I have 20 shares of Store Capital. It's trading at $27.86, as you can see here. It's got a nice dividend. I actually just recently got a dividend, and they also increased their dividend by 2.9%. So that's nice to see. I found this article on Seeking Alpha, and this guy's talking about how it's a superior business model. I'll read through this and talk after. Okay, the company operates in the triple net lease space, where the tenant pays for all the expenses related to the property. That includes taxes, insurance, and maintenance. Store Capital stands for Single Tenant Operational Real Estate, and it summarizes the company's key features. It leases to individual tenants, so a single default does not affect the others, as opposed to what would happen in a mall. Occupancy rates in the industry are close to 100%, and the store is no exception at 99.5%. The company reports this and other useful statistics on its quarterly earnings presentation. So as you can see here, they have it highlighted their occupancy rates. So for 2018, it was 99.7, 2019, same, and then 99.5 for 2020. So that shows me, or shows us, that during COVID-19, they only lost 0.2% occupancy rate, which compared to other companies is great. I mean, I could not imagine only losing 2.2% of your business during COVID-19. So that's what I wanted to show you guys for Store. Now we'll go into my portfolio, and I am going to buy 10 shares. If it'll load. Well, let's just keep talking about. I got in Store a couple months ago. I think my average price was $27.92, so I'm down a little bit, not very much. I'm sorry, guys, my computer is not loading. If it ever loads, we'll get on with the video. But I'll take this time to thank anybody that's watching. I'd like to thank anyone who's liked and subscribed. I'd also like to thank the subscribers. If you're watching this this channel is starting to grow a little bit, and it's exciting to see. Looks like we're loading a little bit, barely. Sorry guys, I've got a older computer. It's like a 2012 Mac laptop, maybe 2013, and I've had it for quite some time. Okay, let's see how much longer it's going to take to load. Okay, we're going to go and invest in shares amount. We're going to go with 10 shares at estimated cost of $278.50. Now this will go through tomorrow, obviously, at market open. So we're going to review order. I wish I could buy more shares of Store Capital right now, but I don't have the funds. So we'll hit buy, and it says your market buy placed at 8:16 p.m. on October 7th will be sent at the start of the next trading session. Thank you. Okay, let's head back to the portfolio. Alrighty, so the next stock I want to talk about is actually PBA. Let's just click it now so it's loaded. Okay, PBA, which is Pembina Pipeline Corp. And I just bought this stock last week. I see a lot of upside potential in this stock. It was trading at around $40 before the pandemic, and has, along with all the other oil stocks, took a big hit. But that gives us opportunity because it has a nice Let's see what the dividend is. It's got a nice 8.46% dividend yield right now. So that's obviously pretty nice to see. So I'll show you guys what excites me about Pembina, if this will load. Okay. So here's an article on Pembina that I found a while ago, and I actually found this article last week, and it's kind of what opened my eyes to this stock. And I wanted to show you guys what really put me on believing in this stock. And this chart is, like it says here, Pembina's total return since 2004. Okay, so Pembina's in blue, and the S&P, the Vanguard 500 index, is the red. So as you can see, it's outperformed the market every year since 2004, 2005-ish. See, if you had an initial balance, it would be worth 10,000. If you would have invested 10,000 in Pembina in 2004, it would be worth $85,516 right now. Very nice. Vanguard 10,000, 43,433, also very nice. And as you can see here, the worst year was down 29%. The Vanguard 500 down 37%. So that's another thing that's kind of nice to see. Best year 46, again beats it, compared to Vanguard's best, which is 32%. So that's what really, excited me about this stock, what really opened my eyes to it. I'd never heard about it before until this article, and it's a really good article to look through. It's called, let's see. Oh, I can't see it right now, but I'll show you at the end so you guys can look at it if you want. It says, in fact, over the last 16 years, PBA has outperformed the market by 3.5% annually. Even its lowest rolling returns over 3 or more years are much better than the worst equivalent period for the broader U.S. market. So that's really nice to see. It's always outperformed in the last 16 years, and pretty exciting to see with an 8.6% dividend yield, or 8.46, excuse me. It's a good stock. Again, this is not financial advice. Don't go buy this stock without doing your own research and making your own decisions. I'll show you guys the article's name if you want to check into it. Okay, Retirement Dreams Can Come Down the Pembina Pipeline by Brad Thomas. And I found it on Seeking Alpha, so if you guys want to check that out, go on ahead. But we'll come over to PBA, and we're going to invest in shares, and we're going to buy 10 shares at estimated $213.60. We'll review it, and again, it's going to be placed tomorrow morning, and we will hit buy. We're done with that. So that's PBA. Nice little stock. Not very well known. I don't know if there's a lot of volume actually in this stock. Average volume 1.3 million. Decent volume, but a nice stock to hold. Let's look at the 5-year just for fun. It's gone up pretty, slowly, but as a dividend growth investor, you like to see it grow slow. You don't need those big jumps, because those big jumps usually mean big falls. And so a nice steady sideways and up chart is nice to see. Okay, so let's go over to our last stock, which is the Bank of Montreal. I have $1,046 in this stock. Got in at an average of $58.92. We'll go over to an article and show you guys what I like about it. Okay, why Bank of Montreal stock is still worth a look today. I'll read this article quick. Investors should not expect bank stocks to rebound as sharply as some equities and other sectors had, but this does not mean they're a bad investment. Many economists and analysts expect that the lockdowns will accelerate business trends across sectors, including banking. BMO has recently said that 80% of its workforce could switch to a blended work-home schedule going forward. Bank of Montreal is still trading at the low end of its 52-week range. Like its peers, the bank has a flawless balance sheet. Moreover, the stock last paid out a quarterly dividend of $1.06 per share. This represents a strong 6.2% yield. So, 6.2% yield, $1.06 per share at a quarterly basis, that's pretty dang nice. What I liked out of that article, this isn't the full article, just a little snippet, but like its peers, the bank has a flawless balance sheet. So that's exciting to see. Also, like if there was another lockdown, 80% of its workforce could switch to a work from home schedule going forward. Now, I hope that doesn't happen, but if it does, Bank of Montreal would be ready for it. There's not much else in this article. Actually, that's all in this article. But so that's my third stock that I really like, and I am going to buy 4 shares at $61.55, which is still a good price, I think. Let's look at the 1 year. It was trading at 76-ish, a little higher, 79, almost 80 range. And on the 5 year, again, it's trended up, but it's also gone a little sideways. But it's really nice to see. Before the pandemic, it was up 42% on its 5 year performance, which is pretty nice. If you times that by 2, say it's at a 10-year performance, 84% on a 10-year performance would be about 8.4% per year, which would be, pretty darn good. 8.4% with a nice dividend on the side would be really nice to have. So I'm buying 4 shares, $61.55, estimated cost $246. It's probably not going to let me. I probably will have to drop it down, but we'll review it. Let's see if it does. Yeah, not enough buying power. Okay, whatever. Let's go 3.5 shares and see if it'll let us. I think it should. Dismiss. 3.5 shares, review order. It'll go through at the market open at the best available price. Done with that one. And that's that. So I wanted to just show you guys my process of researching stocks. I do a lot more researching. I don't just read an article and go buy it. I look into the income statements, the balance sheets, but I'm not going to do this on this video because that would be pretty boring. And it involves a lot of coffee and a lot of reading. And so with that, I am going to say again, thank you for watching. If you watched till the end, that's super dope. I love it. Love you for it. If you haven't yet, go ahead and like and subscribe. It really helps out the channel. But other than that, guys, thanks, and we'll see you in the next one.